Hi, so this is our group, which is B, my honey, SDN, BHD, and we prepared the presentation slide for Dr. Lok Yi Hui.
My name is Tang Chi Shen and my metric number is 305085.
My name is Shahidatul Amira binti Yusuf and my metric number is 307951.
My name is Liang Jian, number metric is 305298.
My name is Makshaiki, number matrix is 305355.
My name is Song Si Hui and my matrix number is 305139.
My name is Siti Aisyah binti Ajanizan. My metric number is 30.
Be My Honey Sendirian Berhad is an agribusiness that sells honey and the product name is Sweet Honey. In 2024, the company sold 30,000 units and the net income is 84,000 ringgit Malaysia. For the year of 2025, the businesses target to achieve a net income to sales ratio of 30%, so there are few different plans that need to consider. This is the statement of profit or loss and other comprehensive income for the year ended 31st of December in 2024 for Be My Honey Sendirian Berhad.
For question 1, A is sales price per unit of the product and the formula is unit sold divided by total sales. Total sales is RM600000 and unit sold is 30000 and we got RM20 per unit. For B, total variable cost, TVC, which means the formula is variable cost plus sales commission. For sales commission, 15% multiplied by RM600000 and we got RM90000. For the TVC, we plus the answer and we got RM390000. For C, variable cost per unit, which the formula is TVC divided by unit sold and 390000 divided by 30000 and we got RM13 per unit. And for D, total fixed cost, which is the formula is sums of fixed cost. Fixed cost of COGS, which is cost of goods sold, is RM6000. For operating fixed expenses for advertising is RM15000 and general and admin expenses is RM12000 for rental and plus 30000 for admin salaries and plus 9000 for insurance and we got RM51000 and for total fixed cost we plus all the answer and we got RM126000. And E, contribution margin per unit, CMPU, which means the formula is S minus V, which is 20 minus 13 and we got RM7 per unit. And F, contribution margin ratio, CMR, which is the formula is CMPU divided by S, sales, and 7 divided by 20 multiplied by 100% and we got 0.35 or 35%. And for G, break-even point, BEP, in unit, which is the formula is TFC divided by CMPU, which 126,000 divided by 7 and we got 18,000 units. And for H, break-even point, BEP, in amount, in RM, which the formula is fixed cost divided by CMR. For fixed cost is RM126,000 and for CMR, contribution margin divided by sales price and we got 0.3 or 35% and divide the answer and we got RM360000.
For question 2, identify the units of product that need to be sold by company in order to obtain a net income to sales ratio of 30% in 2025. Given that net income divided by sales is equal to 30% and with this equation to net income equal to 30% times target sales. So we let X equal to units of product and as we know that net income equals to sales minus variable cost minus fixed cost. So we put up all our figure into it, we can find that X equal to 126,000 unit. So 126,000 unit of product that need to be sold by the company in order to obtain a net income to sales ratio of 30% in 2025. Next, describe possible action that should be taken by the company to achieve the target. So, Be My Honey Sendirian Berhad should increase sales volume. We could employ more sales agent or improve incentive to boost sales performance, or explore new markets such as online platform or partnership with local retail. Besides that, we should also increase selling price, highlight the product quality to justify a higher price point, introduce premium packaging or gift sets. Lastly, we should reduce costs, optimize production processes to minimize waste and maximize output. Identify and eliminate unnecessary expenses such as administration expenses.
For question 3, if the company is not able to increase the number of unit sales, we advise the company on increase the selling price to earn the operating income of 30% of sales. So I use the formulas which is sales equals to variable cost plus fixed cost plus operating income. So we get 30,000 unit sales times with X, which is selling price, equals to 390,000 variable cost plus 126,000 fixed cost plus 600,000 times 30%, which is operating income. So we get 30,000 X equals to 390,000 plus 126,000 plus 180,000. So we got 30,000 X equals to 696,000, and the 696,000 divided by 30,000, and we get the selling price, which is S, equals to 23 ringgit Malaysia and 20 cents. So Be My Honey Senjang Berhad has to increase the selling price from 20 ringgit to 23 ringgit and 20 cents.
Question 4. If the company plans to improve the quality of the product over the next year, suppose the improvement will increase the COGS cost to 55% per unit sales instead at 50% at the current level. Fixed advertising expense is expected to increase by RM 2,000 due to an advertising campaign planned to boost sales. It is expected that the product improvement combined with the higher advertising expense will increase sales by 200%. Firstly, we need to calculate the new sale for 2025. From the question, sales are expected to increase by 200%, so that the new sales will be 3 times the sales of 2024. Secondly, to calculate new variable COGS for 2025. In 2024, the variable COGS was 50% of sale, but for the 2025, it will increase to the product improvement. For fixed COGS, it remains unchanged from 2024, so that COGS for 2025 is RM 60,000. To calculate COGS for 2025 is to sum of variable COGS and fixed COGS. Next, calculate the sales commission. The sales commission is 15% since sales in 2025 are expected to be RM 1,800,000. Next, to calculate fixed advertising expense. Fixed advertising expense expected to increase by 2,000 due to the planned advertising campaign. In 2024, fixed advertising expense were RM 15,000. For general and administrative expense remain the same as in 2024, RM 51,000. To calculate operating expense in 2025 is to sum the sales commission and new fixed advertising expense. Next, to calculate the total expense for 2025 is to total the expense for the 2025, include the total COGS, operating expense, and general administrative expense. For the net income is to calculate by subtracting total expense from the sale. So for the conclusion is the company's goals is to have a net income to sales ratio of 30%, but the 2025 net income to sales ratio is 22.9%, which is less than the 30% target and couldn't be met. To achieve 30% net income, the company need to have net income by RM 1,800,000, and then multiply to 30%, it will have RM 5,040,000, which is more than 412,000.
And so now I'm going to proceed to question 5. And here is the question. You can see that the company is facing with its sales agent requesting an increase in their sales commission to 20% for the upcoming year. And as a result, the company CEO has decided to hire their own sales agent, and 6 sales agents will be given fixed salary for 500 per month. And in addition to their fixed salary, the sales agent will also earn 5% of their commission on all sales. And in the end, I'm going to calculate whether which approach is better and can in result to reduce the company cost, and whether to approve the agent's request. Here is a calculation step for requesting an increase of commission rate to 20%. So the commission rate is calculated by 0.2 times the total sales, which is 600,000, and is equal to 120,000. As we know that this amount is variable, and it depends on the total sales achieved. So the higher the sales can, in the end, the higher the commission expenses. So the new net profit for a 20,000 increase on commission rate is the only change in the operating expenses, which is the new commission, is equal to 120,000, and total operating expenses is equal to 186,000, and the net profit is gross profit minus operating expenses, and the gross profit is unchanged, so it's equal to 240,000 minus 186,000 and is equal to 54,000. But for the company decision in hiring on sales staff, which is the company plans to hire 6 sales staff, each earning 500 per month as a fixed salary, and the total annual fixed salary will be 6 sales staff times 500 per month and times 12 years, which is equal to 36,000. And in addition to the fixed salary, the sales staff will also earn a 5% commission on all sales. So the new commission is equal to 0.05 times 600,000 and equal to 30,000 per year. So the total cost will be 66,000. In the end, the net profit for new proposed solution will be change in the sales agent cost, which is equal to 66,000, and total operating expenses will equal to 132,000, and the new net profit will be 240,000 minus 132,000 and equal to 108,000. In the end, I will do a comparison between an increase to 20% sales commission and hiring 6 sales agent net profit. So 20% sales commission increase will get a net profit of 54,000, and hiring 6 sales agent will get a net profit of 108,000. So the proposed system reduced cost by 54,000, which is 608,000 minus 54,000, and in the end, the manager must approve the new proposed solution, which is hiring 6 sales agent, because it can reduce the total cost of the company and improve the sales performance.
For question 6, provide the management of the company with the recommendation for the best strategy to be implemented in 2025 in order to boost the company performance and increase it competitive in the markets. So the recommendation strategy for the first one is optimize price strategy. Company have to perform in the market research to determine if a small increase in the selling price of the product could be absorbed by customer without reducing demands. So this may lead increased revenue per unit sold. For the second recommendation strategy is increase the sale volume with product promotion and branding and expand distribution channel. So for the product promotion and branding, invest in focused marketing campaign that highlight the quality of sweet honey to attract new customers. For example, include the social media partnering with eco-friendly organization and trade shows. This can result in target market reach and increase the sale volume. So for the expand distribution channel, collaborate with e-commerce platform and local retailer to ensure sweet honey is widely accessible, thus it can increase the sale and reach the target market. The third recommendation strategy is control costs for the company. So companies should simplify administrative expenses and consider automating processes to reduce the fixed costs, negotiate the better terms with the supplier to lower the company variable costs, since variable cost plus fixed cost is total cost, and control costs can make higher profit margin to the company without relying on increased sales. Improve product quality is the one of recommendation strategy to the sweet honey. So introduce a value-added line of honey products such as organic or infused wallets to capture the high-income segment of the customer. So improve the product's quality can access new customer segments and increase overall profitability, increase the sales of the company. The last recommendation strategy is monitor and evaluate performance. So company can implement key performance indicator, which means KPI, to regularly assess the success of the implemented strategy. For example, sales growth rate, profit margin improvement. The expected outcome will be timely adjustment to ensure the goal we meet.
In conclusion, through cost volume profit analysis, Me My Honey Syndrome Berhad can make informed decisions on pricing, cost management, and strategy change to achieve 2025 goal. Implementation of this strategy will enhance its profitability and market competitiveness. That's all for us. Thank you.